Let's go across. We have Jonathan Schiessl, Deputy CIO at Westminster Asset Management, joining us live. Great having you, Jonathan, and great chatting with you. This is Harsha. I want to first start off by asking you, what's the take with regard to the latest happening in the US, especially the government shutdown? How long are you expecting this shutdown to last? What kind of an impact are you penciling in on the US economy and the second order impact in emerging markets, including India? What's the sense?
Hi, good afternoon.
Good afternoon.
Yeah, look, it's extremely difficult to have any insight really on how long the government is expected to be shut down. It seems to be clearly both parties are very intractable in their positions. So this could carry on for some time. But quite frankly, the amazing thing is, most asset markets, equity markets in the US still continue to grind higher despite all what is going on within the government there. So, yeah, for us, obviously, I think the whole development remains dollar negative. And clearly, it's giving further impetus to precious metals and gold, which has obviously been pushing up to new all-time highs whilst this has been going on. But, equities as such, and indeed, if you look at bond markets, the long bonds have been coming off as well. So risk assets, if you like, seem to be not too concerned with what's happening. But the currency markets and the precious metal markets seem to be pricing in that concern.
Right. So, Jonathan, on the basis of that premise, what should the India equity investors do in terms of a portfolio rebalance, if at all?
Yeah, I think so. I think the comments you were just making about metals and to a lesser extent energy, I think obviously commodity players, the miners and the metals have been performing extremely well, particularly globally as well, the metals and miners, gold miners, etc. And part of the reason for that obviously is a weaker dollar. And that's obviously still, that's an area we certainly continue to deploy capital to. We think the commodity space generally looks attractive. I think oil is a bit more difficult because, as you were just talking about, supply concerns around oil, but clearly oil remains, has a large element of a hedge against geopolitical risks but which for the time being don't seem to be too concerning the markets. So oil aside, I think certainly investors should still look to be having a decent weighting within metals and mining. And, the whole value side continues to look attractive, although obviously global markets are still being led by tech and US technology stocks generally.
Jonathan, where do you see, how do you see metals and that entire play? Because we've seen plenty of zing on those metal counters, at least back here in India. And you have a good pulse of the global marketplace. Do you believe that India can remain insulated and some of the domestic companies here could still see some bit of upside? Trying to understand that.
Yeah, look, I think, obviously, broadly speaking, pricing for the underlying commodities looks quite attractive here. You were talking about copper earlier, hitting new all-time highs. That's obviously going to have beneficial impacts on domestic Indian companies who are extracting copper. And although I think when you look at copper, the more recent short-term price moves have been driven by supply disruptions as opposed to buoyant demand. But I do think, yes, the space generally, the metals and mining space still looks attractive. And, historically, valuations are nothing to be too concerned about. And, you know what, globally, a lot of investors who have and still continue to have very high weights in US technology stocks have started to deploy some of that cash into more value sectors. And obviously, I think the metals and miners are benefiting from that and will continue to do so.
Last quick question with regard to premiumization. You obviously are of the view that premiumization is a good play where India is concerned. Any specific pocket there that you are preferring in that as part of that play?
Not particularly. It's obviously from a consumer goods perspective, that's a very long-term trend which has been happening and continues to happen. And the interesting thing I think is, back in the day, I think most people would look at MNCs as the primary beneficiary of that, but now clearly, particularly within India, a lot of domestic players have come into that space offering premium products as well. So that's been a positive story for the Indian market. But yeah, I think it goes across the board. Quality is going up. I think consumers are being more discerning. Price is clearly still very important, but certainly quality is getting more important. And I think the trend, without getting too sector specific, the trend still has a lot further to run.
Makes sense. Okay, just looking at the market construct right now, and let's analyze what's holding out. And while, of course, metals are the ones which are gaining ground, there's also Unilever, SBI, Asian Paints. Some of the consumption spaces are the ones which are perking up. And Nestle as well is making a little bit of an attempt to actually claw back into the green and putting on more weight for a Titan and from an Indigo as well. Couple any trades when it comes to pure FMCG or staples?
Yeah, past couple of days, we've seen that there was some sort of deterioration that has happened, but the Tata Consumer is the one particular stock that has stand out quite well. Today, it is trading quite of the negative to means 0.6, 0.7% is negative, but I find structurally this particular stock in a good shape. Right now, the 1136 level it is trading, so around the 1120 stop loss as a stop loss, we can see the upside momentum on it, and on the higher side, the upside potential can be up to 1160 to 1180. Tata Consumer stands out.
Jonathan Schiessl still with us. Jonathan, what's the sense like with regard to US markets? Because those have really run up and they're holding up in the hope of rate cuts, which are expected. But how likely, in your opinion? And talk to us about valuations, because in terms of market cap to GDP, the ratio is really skewed.
Yeah, so I think, we've all seen some pretty frightening charts comparing current valuations with what we saw back in the 2000 bubble, at a sort of similar-ish level. I think on the one side, when you look at the tech companies that are clearly leading the whole and keeping the markets higher, we all know they're extremely profitable businesses, well-run businesses, huge monopolies. And it doesn't look like that'll change anytime soon. I think the concern for a lot of investors is clearly the huge CapEx boom that's underway in the whole AI space, and whether that CapEx is likely to ever generate a material return compared to what these companies have used to being earned. That's the concern. I think for the time being, markets are sort of, can easily drive higher. The key factor that we're looking out for, as you mentioned, all has to do with rates and inflation. Certainly, if the dollar does continue to weaken off, then and everything that's going on in the US, inflation still looks like it's fairly entrenched and could easily move higher, according to most of our models, going into next year. So the likelihood for rate cuts is probably the market, I think, was initially pricing in too many cuts. That is slowly being undone. But the key thing to look for is what's going on long-term yields. And long-term yields, if they start pushing higher, then I think that could be the signal for a steep correction in a lot of these high valuation US stocks. But all in all, for the moment, I think the market can go higher and grind higher for the time being. But there are warning signals clearly out there.
Right. Okay, that's the red flags around the US equity markets right now. For now, Kalyan Jewellers, that's one name. We just perked up a good 5.5%. An idea, Kunal, your top trade for the day is sitting pretty with over a 3.5% gain.
Yeah, I think this is a very big breakout for Vodafone Idea, which we were discussing earlier also, that the stock is due for a much more bigger upside. It's been showing a lot of potential, and positive signs over the last few days. But I think after today's move and the stock coming back to a breakout at that 9 mark, I think it now looks very attractive. So we'll stand by with the target of 9.5 to 10 at least over the very near term for Vodafone Idea.
Okay, that's Vodafone Idea that Kunal is talking about. If we can have that intraday chart. Kalyan Jewellers, of course, is a buzzer, but that's Vodafone Idea, which was a buy call from Kunal, and it's now sitting at the high point of the day. 883 is where that stock is. But Kapil, any buzzing ideas that you're spotting in this market? Anything from the mid or the small caps?
As far as the metal stocks are moving higher, so within the metal space, there is one particular stock called as an Infa, Indian Metal Alloy Company. So this particular stock has shown the good strength, and across the total market cap and the metal sector, this particular stock is ranked one over here from the price performance perspective. So right now the 1167 is the level for the stock, and here we maintain a bullish stance over there. After the couple of consolidation patch, it is showing the bullish continuation sign. So we remain positive on that particular stock with a stop loss of 1140 level, and on the high side, the upside potential can be up to the 1240.
Okay, Jonathan, I'm told we're going to have to let you go, but just one quick question if I can squeeze in. Give us your sense with regard to where gold and silver is concerned. We've seen a very strong rally in both those metals. What next? And does silver look better from a risk reward standpoint even now is what I'd like to get a sense on.
Yeah, so I think, gold price is quite frankly extraordinary. And I think the factors that have driven it higher are all still in play. Central banks globally are diversifying their dollar holdings. Obviously, the inflationary backdrop for the global economy, geopolitics, all these factors are still in play. And obviously, the icing on the cake is the dollar and people losing faith with what's going on with the US dollar. So I think gold can still certainly grind higher. It looks fairly overbought, and you could argue just as much as people have been talking about a bubble in US tech stocks, there's a bubble in gold. But as we see with most bubbles, they can push a lot higher before they eventually correct. So we still do believe there is upside to gold. Silver, and you look at any historical chart of the gold-silver ratio, and silver certainly has a lot of catching up to do. Obviously, silver does have more industrial uses and wider economic uses. So there are linkages with the global macro that perhaps in the past have kept it, more recently kept it from underperforming versus gold. But silver also, still is providing a role and a function, and certainly a lot of silver miners, etc., have, and obviously the spot price, I think probably does have in the short term more upside potential than gold. But we still do think gold looks attractive for the time being.
Right. Okay, Jonathan, great to have you on the show. We'll let you go on that note. Thanks as always for your time.